Today, the SGX Nifty is still looking tentative, just a half a point move so far. Let's try and get some perspective then. Rohit Srivastava, fund manager for Protech PMS at Sharekhan's joining in. Rohit, thanks for taking the time out today. What's it looking like as far as the outlook for the market is concerned? We've had a decent run in the last couple of days. The global news flow also helping a little bit in that sense. Are we once again ready to face some bit of resistance around these levels?
I think so. We sold off from around 85.60 last week, and our market really has not been correlating so closely with what was happening around the world. We've retraced around 66% of the loss we saw last week, so this is an important level where we are at. If the trend down has to resume, I think it should from here itself.
Okay. Rohit, let's get in some of your strategies then. There's some amount of attention that's been turning back to some of those pharma majors. We've got lots of news as well on individual stocks. But as a theme, are you looking positive on the pharma pack right now?
The pharma index itself broke out, of a falling trend of the last 2 months. So I think in the short term, there could be some upside there. In fact, if you look at the breadth of the market, even though the Nifty has not moved up so much, we are seeing up to around 1,800 stocks move up every day. So it's going to be very stock specific. Until we don't get the broad market sell-off, I think even if the Nifty doesn't go up, you might not see any big moves on the downside. So in being stock specific, I think pharma would be one of the segments that you could trade on the long side. Cipla is a stock that I've been recommending sometime and there's still some more upside because it's just broken out of a falling trend of the last 2 months. So we would be looking at pharma stocks as probably the only area that you may recommend right now.
All right. So that's as far as some of the stock-specific calls are concerned. But, what about the outlook in terms of the banking names as well, Rohit? That's going to be the interesting space. If the markets are expected to be somewhat muted going forward from here, and as you're saying, you possibly are in that resistance band as well for the market, you believe there's a case for the bank Nifty to cool off?
I think there is, although there could be a little more upside, little more meaning maybe around 100 or 200 points up to say 19,250. I think that's the resistance. I was also looking at 19,100. We are very close to that. So from one of these two levels, I think the trend down for Bank Nifty could resume. And the thing to watch out for really is whether the private sector banks start underperforming because the Bank Nifty itself peaked in Jan of 2015. And since then, it's been making lower tops. We've seen most of the weakness in the public sector banks. But when it comes to private sector banks, while they have sold off, it's not been very steep except for ICICI. I think that has been the weakest among the private banks, and probably that would be the case. So on the first sign of selling, I think among the private banks, I would look at ICICI Bank to sell into. And then probably look at some of the others. But I really want to see the signs of selling show up in the private banks as well because the next leg down on Bank Nifty is likely to be steep based on the pattern so far if it doesn't go beyond these levels. And that's not possible unless the entire banking pack actually sells off, not just the PSU banks themselves.
All right, currency opening on an extremely quiet note. 63.56 is what we're seeing. As far as the rupee is concerned is what we're tracking this morning in terms of the way that one's actually panning out. Marginal bit of weakness on opening is what we're seeing on the currency, pretty much on the back of what we saw in overnight action on the dollar index as well, which saw a little bit of a spurt. Dhaval Shah, risk management consultant, joining in. Dhaval, what's your reading in regard to the way the currency is panning out and in regard to levels?
Yeah, good morning to all viewers. Currency continuously moving in the price band only, like 63.30 on the downside and upside 63.70.80, despite of very huge negative news from the markets, especially from China or maybe Greece concern or maybe Fed rate decision which is coming. So overall, I am just observing one of the things like despite of such a huge concern in the across the global market, but still the safe haven asset is not getting any demand in the market, such as gold or maybe bond, which is getting very much sold off last a couple of months onwards. So probably I think despite of this many negative news, rupee is not depreciating beyond 64.30 since last couple of months. I believe more or less it will remain range bound, or slowly gradually we might see a further appreciation in rupee. So short term we can target a range of say 63.20 to 63.80, but slowly gradually I'm targeting first downside level at 62.80.
All right, well, fair enough. Thanks for getting us those updates there in regard to what we're seeing as far as the currency is concerned. It's going to be interesting to see how this one plays out going forward from here. Currently at 63.58. So far, it's quiet. In regard to the way a couple of the stocks that are actually panning out in focus, IFL's up 19 to 20% straight away on the back of that open offer being announced by Fairfax India this morning is what we're seeing. And we just got up with Nirmal Jain who's saying, well, we had no idea about that. But promoters so far still in majority is what we're seeing in regard to the way it's panning. There are a couple of the strategic investors in that as well. Let's see how this stock pans. But we've been in conversation with Rohit Srivastava of Sharekhan. Rohit, interesting times for brokerages, isn't it? I mean, we've already got a couple of the other guys pick up substantial stake in some of the NBFC ventures. I don't want to comment about Sharekhan and the kind of buzz around that, but any comment here as far as this entire deal with Fairfax India and IFL is concerned?
Well, IFL is one of the more diversified companies in the financial services space. So they've been moving into various segments apart from just pure broking. So that is it is interesting because each segment is different early on. I think the financial services stocks, if I just look at all of them, they've been consolidating in a price band for many months now. We haven't really seen a breakout either way, and I think that would only happen when the market itself breaks out of this range. And till that happens, I think they consolidate because they remain highly correlated to the markets themselves, because it's a direct business associated with the financial markets.
Okay.
All right, so that's as far as this Fairfax India 26% voluntary open offer that we're seeing stake in IFL is concerned is what we're seeing in regard to Fairfax India. This one's going to be interesting. 20% in the pre-open for IFL Holdings.
It was to be expected, wasn't it, Priyank? Let's wait and see how that stock shapes up. It's going to be an exciting day for it. Rohit, since we were talking about housing finance and so forth, I also want to shift to another finance company. IDFC, what's your call there?
Yeah, IDFC saw a pretty steep decline in the last quarter, and it was oversold. So it's been moving out of that range. I think there could be still some more upside. The last few days we've seen it move up from the lower band of its range. So I think that's a breakout, and we could see another 5 to 8% upside from here in the short term.
All right, so that's as far as a couple of these names are concerned. But, Rohit, clearly in terms of positioning right now, in terms of strategy on the market, what's the best way to be positioned in this market? Because, it's been driven by global sentiment. It's been driven by a lot of events that are even lined up going ahead from here. So what's the best way to be positioned in this market? What's the best strategy?
The strategies have to be very short term, especially on the long side, because like I said, we are not seeing too much upside, and it's very stock specific. As long as the index remains between say 83, 8400, you might see stocks that are gaining, and they may be short term trades say for a week. I wouldn't take anything beyond that time frame. My sense is beyond a slightly longer time frame, if we go into say 3 weeks or 4 weeks for a positional trade, we'd probably look at more sell side trades. So we'd look for the weaker segments, which are actually, like we discussed, could be financials, it could be in the reality stocks, which have been weak all along. And so we look for the weakest segments and look into selling them, rather than look at the stronger segments that might weaken over a period of time. So that's the kind of thing we would do. We'd look at more shorts than longs. But we do need the market itself to confirm that by an actual sell-off in the broad market. So once that starts, I think then it will become, we would keep adding positions on the sell side. That's my sense of what the market is going to look like.
I think that's strong sectors that are going to start becoming weak. And on your short radar, I know you've got got stocks like an Infi, a Bajaj Auto. Has IT run its course for now? Because, we had some other comments coming in yesterday saying some of these stocks perhaps deserve a little bit of a break given how the markets have been fairly hard on them.
Yeah, among the tech sector, I mean, we saw the first result and TCS sold off. Now, TCS hasn't really broken its 1250 lower end of the range because it's bottomed there around 2-3 times. So probably you could see some bounce back there. But Infosys actually broke the low it made in June, which is why I think within the IT sector, it's the weakest stock and you still have earnings coming up. So I think up to that point of time, Infosys is likely to remain weak. We'll probably sell it on rises and look for more downside from here. Probably as signs show up in other tech stocks as well, because the BSE IT index also has broken its previous swing lows. So that is indicating that there would be a general weakness in the IT sector, but the weakest stock within that is Infi, so probably that would remain our target for selling.
All right, so that's as far as cues in terms of a couple of stocks are concerned. Rohit, we'll leave it there. Thanks so much for joining in today with your views and perspective on the markets as well as some of the stocks that are on your radar there.